Alrighty, let's get going. Once again, my name is John LaMaster. I'm a Life Sales Director here at IAMS. Once again, excited to be joined here by Leon from EquiTrust to talk about the Max Wealth Bonus product. I know it's a product I'm very excited about. Everybody here at IAMS is excited about. It was a great product in the past. Sold a lot of it here, so really excited for this to be launched. Product launches tomorrow, so I will go over a couple slides here to go over IAMS value proposition, how we can support you as an IMO, as independent agents here. So first off, we have our new producer bonus, some ways to put money back in your pocket here in your first 180 days as a new producer with IAMS. We have various levels here from the $100,000 level all the way up to the $1 million level. So production levels count as FIA business and target life business, and also single premium life business. So at that $100,000 level, you get $750 cash, an iPad. Moving down to the $500,000 level, get a stay at the Ritz-Carlton, 5,000 piece mailing postcard. So various options here. So if you have any questions on this, do not hesitate to reach out to any sales director here at IAMS. Our best number is 800-255-5055, and ask for anybody on the life or annuity sales team. Next, we have our business builder. So we have a couple different ways here to put some money back in your pocket. First off is our referred producer program. So you get a $50 one-time bonus when your referred agent gets contracted with us here at IAMS on the life or annuity side of things, and then we'll pay out thousands when your referral writes additional business. Pay out quarterly, a couple different percentages there based off of life target, FIA business, MYGA business, and single premium life. Another way we want to put money back in your pockets, help share costs, is our marketing reimbursement program. So we'll pay $100 in marketing reimbursement per $100,000 of FIA business, and then that equates to $200 per $10,000 on the life target business, and $200 per $100,000 of single premium life. So as we talk about here, the Max Wealth Bonus program, have any clients there in mind? Some good way to get some good marketing reimbursement back into your pocket. Back office support, so this is kind of what we pride ourselves on here. At times, we want to make sure that you're working smarter, not harder. So both on the life and annuity side of things, going to be a ton of resources you have available to you from submission to commission. Our new business teams on both the life and annuity side pride ourselves on, being proactive on case statusing, touching cases multiple times a week for updates from those carriers. Can help get life and annuity quotes from your sales directors. And what we want to be as sales directors here is a sales partner, not necessarily an order taker. So love walking through cases, different scenarios of how to boost sales or work through a hard case. So if you have any hard cases that you're working on here on either the life or annuity side, reach out to your sales director and they'd love to help you out here. Our IAMS website, IAMSinc.com, is a great resource you also have access to when contracted with us on the life or annuity side. So there's going to be some sales tools on there. Term quoter on the life insurance side of thing. Our sales resource library, you could probably spend 2 or 3 days on there just digging through all the content in that, thousands of pieces from fact finders, client presentations, different tax strategies, all that sort of good stuff. There'll also be current annuity grids, long-term care product grids, industry links, and then also have access to online forms for both the life and annuity side of things. EAP solutions. So as we know, most of the industry is moving paperless for the good or the bad, but I know on the life insurance side of things and also on the annuity side of things, NIGO rates are significantly lower when using an EAP application. So we kind of try to push everybody to use an EAP. We have various platforms here with Luma and Firelight specifically on the annuity side of things, and then a handful of carriers, I know, including EquiTrust, the new Max Wealth Bonus program product will be on Firelight, and then pretty much the remainder of the life insurance applications will be on iPipeline, and then Sunfire is mostly for those senior health products. So if you have any questions here on EAP solutions available at IAMS, do not hesitate to reach out to a sales director. Once again, our best number, 800-255-5055. So our creative services are team there that Jacob runs. I think there's 5 or 6 of them now. Do an amazing job. They have different things they can help you out on here. They do a great job of creating digital solutions, so website, social media, email marketing, online newsletters. Also have agency solutions there to help create a logo, business cards, brochures, all that kind of stuff, and then also can help out there with some digital or some print ads, if it's handouts, brochures, flyers, newsletters, whatnot. So if you have any questions there, reach out to your sales director and we can get you connected there with our creative services team. Once again, 800-255-5055. Also want to touch on here is our complimentary marketing analysis. So this is kind of like a fact finder, essentially, to figure out where you're at in your business, what your goals are, and we will then put together multiple recommendations on the marketing side of things. If it's lead gen services, any website design, we'll do a free website review and social media review of the current pages that you have and give suggestions there. But it can help refine your target market, strengthen your brand, explore new marketing opportunities, create and expand your digital footprint, which then overall improves your bottom line. So talk to your sales director here if you'd like. If you have not had a marketing analysis yet here this year, as we're heading into Q4, great time to start some marketing, get ramped up on marketing after maybe a little break from summer. So in the year strong, starts off here with a marketing analysis. Next, we have our RIA, which is IAMS Wealth Management. So started here 5 or 6 years ago. Charles Jr. And Duncan do a great job over there. So if you have any questions, reach out to your sales director. They can get you in contact here with IAMS Wealth Management, either Charles or Duncan. Great way to increase revenue, get a higher wallet share with your clients. You know, if your clients have multiple different products with you, if it's life insurance, annuities, then you can also offer some managed money. It's a great way to strengthen that relationship and make sure that they are not going to anybody else. Next year, we have our Life and Annuity Academy. So we'll host 3 or 4 of these throughout the year. We have one coming up here next week, actually. So we'll bring in typically 1 or 2 carriers that we'll partner with on this for these academies, give them opportunity to talk about their strengths and their value propositions, but then we'll also bring in top producers from across the country to give some sales and marketing ideas. We'll go over macro tax planning, creative services. We'll talk about ways to build your brand. Like I said, Duncan will be there from IAMS Wealth Management. So if you have any questions on or interested in our IAMS Wealth Management, I'm going to load a question here, maybe. All right, there we go. I'm going to open up a poll. If you're interested here in one of our life and annuity academies, mark yes, and somebody on our sales team will reach out to you here. All righty, thank you for everybody there that has answered that. Well, and now apologize for that. So next we have our qualification top producer trip here. Our next one will be to Quebec City, Quebec. We run 18-month qualification periods, so that actually started back here in January and will run through June 30th of 2025. So need 5 million points to qualify for the trek to Quebec there in Quebec City. So if you have any questions on that, reach out to a sales director. If you want to get an update on where you're at points wise, we'll be able to help you out there. But that trip will be August 3rd through the 8th there in 2025 in Quebec City. And lastly here, before I hand it off to Leon, obviously we have our Facebook, LinkedIn, YouTube channels. So like and follow us on there for market updates of what's going on in the market. And then also here at IAMS, new product announcements, rate updates, all that kind of good stuff. Obviously then we have our IAMS Inc. website and our phone number down there at 800-255-5055. Make sure you like and follow us on all of our social media. So I will now hand it over to Leon to talk about their Max Wealth Bonus single premium life product launch.
Awesome. Hey, John, appreciate it. And can you see my screen? I always, yeah, it looks like we're good to go. I see it on my end, so I think we're up and running. So, hey, so a couple of things, right? First and foremost, I really appreciate the partnership with IAMS. A couple of things I've heard, various directors go through, their kind of value prop of IAMS, and I'm always impressed, right? They've got a really robust support structure, opportunities, to market yourself, your business, and really just partnering with you as good as I've seen. So, kudos, John, to you and the team at IAMS for what you guys offer. We really appreciate the partnership. And anytime I get a chance to talk to your group, I take it as a privilege, and this is no different. I'm extremely excited about what we're going to share today. The timing is perfect. Today is the day before the launch, so we're actually officially launching this product tomorrow, our WealthMax Bonus Life product. I'm hoping that there's at least a handful of folks on the call that worked with and sold the previous product, because you'll have a baseline to understand the improvements and upgrades we've made to this product. John's been instrumental, in kind of the pre-launch process. Attended a meeting that we had, with various groups to get them educated on it, get them up to speed and prepared to market this product. So we're ready to go. We're fired up, gang, and I'm excited to share this with you. So let's go ahead and jump into it. So yeah, so introducing WealthMax Bonus Life. It's our index linked life insurance product. The cool thing about this product is some of the, obviously you're gonna hear me talk about this as a wealth transfer tool, but also, depending on where you're at in life, right, as a client, there's some awesome living benefits, right, some income opportunity that is new to this product. Combine that with the simplicity of the underwriting model, and we think we've got something that could be a real home run here. So you guys know this, right? We've got, over the next 20 years, I'm not even sure if I can visualize what $84 trillion is, like, written out. It's a lot of money. But what I really see when I see that number is opportunity, right? That, in our business, that creates opportunity. So $84 trillion, passed down from older Americans to their heirs. And again, I'd mentioned WealthMax Bonus Life really can help the transfer of wealth, to their beneficiaries. At the same time, right, plugging holes and potential holes, right, in their own planning, whether that's, they don't have or have not been able to acquire long-term care. Okay, and I'm always very careful not to say, hey, what we're offering here is long-term care, but it does fill some of the same gaps, right? The income piece that we're going to talk about. So this is a multifaceted product, and one that, especially as the annuity market is shifting, right? We all know what interest rates are doing. I think this product becomes more and more viable by the day. So just some of the basics, right? So you got a 10-year surrender, $10,000 minimum entry, a $1 million face max per client, okay? It's a single premium product, issue age 45 to 80. Really nice 12% premium bonus to get those accumulation values cranking, a return of premium provision included, the accelerated death benefit rider that is, I'll go through that in detail. This has not changed, but I do believe is an absolute selling feature to this product, especially in today's day and age. The commission, hey, I always joke, really not, it's not a joke, it's reality, right? We're all for-profit organizations, and that's okay. You guys should be thinking about, hey, how do I generate revenue, right, with this product? 10% commission, 45 to 75, and then 7%, 76 to 80. This is kind of where I feel like one of those late night infomercials or commercials where they go, hey, if you buy now, we'll give you a second set of steak knives. Well, between now and the end of the year, we've got a 1% commission bonus on this product. So instead of 10 and 7, it's 11 and 8. So man, nothing wrong with that. That's a nice Really nice payday on what we expect to be a product that has a really high average premium. So hopefully that gets you guys excited. I know it does. It gets me excited to offer that for sure. All right, so this is a reintroduction. So I'm assuming that there's at least some folks, like I mentioned on the call, that are familiar with the old version of this product. So what's the same? Still has the return of premium feature. It's a single premium product. It's an indexed whole life chassis. It's got the accelerated death benefit rider and a no lapse death benefit. What's different? What do we add? What do we upgrade? Okay, so 12% premium bonus. I mentioned that earlier. That's a big deal. New indexing options, right? We've added a couple. I'll talk about those later. So all of those are available, to give you flexibility and options to offer to the client to remain relevant regardless of the market. Okay. The longevity benefit, that's our income play later in the contract, and I'll talk about that again later in more detail. And then the underwriting process is an absolute differentiator from what we had previously. Not that it was overly complex previously, but we've removed some hurdles, some heartburn from that process. And if you like the words immediate decision, then you're going to love this. So, hey, how does the coverage work? How do we establish the initial face, the initial death benefit? Okay, very simple. This is just a snapshot of the grid. And hey, by the way, guys, everything that I show you for the most part in slide forms. A lot of times, inevitably, John knows this. I'll get someone will say, hey, can you send us the slides, right? Well, we don't distribute our slides for a couple of reasons. One is because these things change, rates change, and products may change over the years, and now we've got old information out there, so we don't distribute the slides. But what we do is we create essentially one pagers for almost every slide that are available, from a marketing perspective for you, and that are updated appropriately. That way, if if you get it off of the microsite, which I'll show you later, that it's up to date, right? So, and this is one of those pieces. We've got a full grid available in a quick facts, format. So you guys can see this, but this gives you a good snapshot, right? You got starting at the top left, 45-year-old female. There's really only two underwriting classes, right? So it's approved or declined. That's it. Okay, approved or declined. And then it's non-tobacco or tobacco, and then it's obviously based on age, relevant to their tobacco or non-tobacco standing. So a 45-year-old female, non-tobacco, she puts $100,000 into this product. We get an immediate death benefit of $330,000. Okay, so you got somebody that's got some money laying around that's not earmarked for anything, that's in a liquid state. They're probably going to leave the kids or grandkids. And they've now put into this product, okay, and I'll talk to you about the positioning of this a little bit later, that it's gone from that $100,000 to $330,000. That's really nice leverage on those dollars. And I always say, hey, take it far right down to the bottom. You've got somebody non-tobacco at 80 years old, they're still gaining 15% leverage on their money. I think that's a pretty nice place to be, especially when those benefits or those dollars, death benefits paid, from a tax-free position. So we really think that this is an awesome tool, when you've got folks that have those dollars sitting out there that, really are not earmarked for anything. We'll talk funding a little bit later. Return of premium, you guys get it, okay? This is more of a warm and fuzzy for the clients. What I mean by that is a lot of times, especially with a product like this, where we've got a bonus, we've still got, and I'll show you the rates here shortly. We've got 5% fixed, 12% premium bonus, 17% first year yield, essentially. We get a couple of years down the road and we're not talking return of premium, we're going to surrender it, right? Because they're outrunning the surrender charge with the premium bonus and even the fixed account if they're not in one of the other indexes. So, but that said, from a client and a sales positioning perspective, this is a really nice talking point for a client. They receive their full premium back, less withdrawals. If they utilize the loan feature, the accelerated death benefit or longevity benefit, it does terminate this feature. But unless that's the case, they do. I always use it. I call this kind of the things go bump in the night feature, right? Hey, something happens, they're like, holy cow, I really need that money back. I need the liquid access or access to that liquid capital. They can get their money back, and it makes the client feel good. So the accelerated death benefit rider. So again, this has not changed, gang. So, but that said, a really powerful tool in today's day and age. You guys get it. I mean, you're really talking to clients about two things, okay? When you're talking about their retirement, it's more complex than that, but generally two things. They're in their money, right? How long is it going to last? Do I have enough? What kind of lifestyle is it going to provide? Just the cash, like the money. Whether it's a lump sum or it's an income over time. They want to, hey, do I have enough money? And then healthcare, okay? And that comes in a lot of forms. Just base health insurance, right? Or hey, what if I have a long-term care event or a more serious health event? What levers can I pull to protect myself against spending down the assets that I have set aside for retirement? And this is a really nice solution for those. So from a terminal illness benefit perspective, we're going to pay out a lump sum benefit of 95% of the death benefit if they are diagnosed as terminally ill. Okay, I'm going to show you a couple of slides that are also in the illustration here in a little bit that I think are really powerful visuals for the client. Nursing care confinement, they can actually get this paid out in one of two ways. So you can get up to 100% of the death benefit if they're confined to a nursing facility for at least 90 days in one of two ways. They can get paid out monthly for up to 36 months, or they can take a lump sum payment at an 85% discount factor. That really just comes down to where are they at in life, what do they want to do with those dollars, what's important to them, and they make that decision. The chronic care benefit is similar, paid out in one, the same way, just a little bit of a little difference in the terms. Up to 100% of the death benefit if they're diagnosed as chronically ill. Up to they can get up to 60 monthly payments or a lump sum of 75% discounted of the death benefit. So I'll show you what that math looks like, and especially what it looks like immediately upon putting the contract in place. I think that's the powerful visual that you guys will see. Okay, longevity benefit. So this is an income play. You guys are, I'm sure, talking more and more, or depending on your practice, I've always talked about layering income and hey, how do we create a lifetime income or income for some substantial amount of time? This is not a lifetime income play, but this is an income play nonetheless. So the insured can elect to access their death benefit in the form of income, okay, after a couple of conditions are met. One, the policy has to be enforced for 15 years, and the insured has to be 85 years old or older, okay? So mathematically, you got a 65-year-old, okay? This is just 20 years, right, that they'd have to have in place because they have to be 85, okay? Assuming no withdrawals, use of the death benefit rider have been made, this is accessible to them. And I've had some folks say, hey, look, this is really great, but man, this is a long-term play, and that's right, it is. But here's how I would position it if I were selling this, right? It's, if you had a crystal ball and could tell me what someone's, financial situation, how that will evolve over 15, 20, 25 years into retirement, man, I'd love you to share that with me. And the one that tells us what the financial markets are going to look like down the road. It's just an awesome feature to sell to a client to say, hey, we hope we probably never really need this, right? But if we do, we've got the opportunity to pull forward, out of this contract, in this illustration, close to $4,700 a month for 5 years. Again, not a lifetime income play, but a really nice five-year income opportunity that is added to this product. Again, I think in today's day and age, as we look for ways to layer income, this is a really, really cool addition to this product. So I talked about the account options. All of the indexing options that we have available are here. We've added, a couple, obviously the performance trigger. We've got the S&P 500 dynamic intraday. The performance trigger has been really popular since we put that in play, right? It's a win or lose deal. I mean, you've got the downside protection, but if we make $1, in the S&P, we get it, we get the 8% upside there. So that's been one we've seen a lot of money go in, and then, still really strong interest rate, on the fixed. Question I get quite a bit is you see rates adjusting on the annuity side, Leon. Do you expect this to be adjusted. We haven't even launched this product yet, gang. So tomorrow's day one of the launch. There's no plan to adjust these rates. It's really a different actuarial table that this is built off of. We're in really good shape on this product. We're excited to offer some stability from a rate perspective here. And again, as you look at the annuity market, where that's going, and look where this product is positioned, we think there's some absolute opportunity here, from a client perspective, and then, from a positioning perspective for you guys. So flexibility and liquidity, I talked about these, right? Some of these slides are a little redundant, but I do like to go over this, right? When you're talking to the client, you're positioning this product, hey, how can I get a hold of my money if I need it? A lot of times that's what the client will ask. Hey, I love all the, I love the growth opportunity. I love the death benefit rider. I love the leveraging of my money, but boy, if something happens, how can I get access to my money? Well, they have the opportunity to get free withdrawals after the first policy, or 5% of the accumulation value. They can take a loan against this. Neither of those, in my opinion, are a reason to sell or buy this product. Those are nice to haves. But not what I would be selling it on. But boy, again, these are things that the client needs to know are available. We got the accelerated death benefit rider, the longevity benefit, and the return of premium. So you've got a ton of liquidity options with this product. And again, I think that makes the client feel, I don't even know if the right word is safe, but feel like, okay, if I need it, I can get it. But properly sold, this is not where they're going to go, hopefully for their first line of liquid capital, right? From a fees perspective, pretty standard. The expense charge is deducted from the policy values on a monthly basis. It's on a per $1,000 charge, and it's based on typical actuarial factors: issue age, gender, underwriting class, and that's for the first 15 years of the product. Policy fee, and by the way, we've done a really nice job of, and John, if you don't have one, I'll send you a sample illustration. It does a really nice job of laying out these in the illustration. Very simple. The policy fee, $120 a year, and then the cost of insurance and what that looks like as this trends forward. They've done a nice job smoothing the trajectory out on the growth of this product, where the previous version, I think it was years 6 through 10, like the death benefit took a dip. For some reason, again, it predates me being here at EquiTrust, so I wasn't overly involved or in that the original product. But I know, this is a smooth trajectory, and it's much easier to explain to a client for sure when you start going through an illustration. State approvals, this was easy. We had this chassis already approved. We had to get a couple of the upgrades and updates amended and approved, but it's approved in all states except New York. There are a few state variations where we've had to, make accommodations based on the state to the longevity rider or the accelerated death benefit rider. One of the cool things is, hey, this thing's available. The accelerated death benefit rider is available in California. That's an absolute game changer out there as they struggle with the long-term care piece. Again, this isn't long-term care, but boy, it does solve some of the same problems. So I've got 3 or 4 groups out there that are just totally excited to have this and be able to have this conversation with clients when they haven't been able to do it previously. Okay, underwriting. This is almost an oxymoron, right? When we say simplified underwriting. Yeah, I've been in all phases of this business, and when someone would tell me simplified underwriting, I'd kind of roll my eyes. But we've gotten a lot better in our industry at really delivering on that, that verbiage and making it truly simplified. This is a 100% digital process. It's non-intrusive process. There's no phone interview. There used to be a 15 to 20 minute phone interview. No meds, no labs, no medical records, just a third-party data pull. And in 100% of cases, you'll get an immediate decision. So I actually was sitting on a call this morning, a webinar, a demo of the application tool. Go through the pre-qualification questions, which I'll talk about here in a minute. Before they got to the 3rd or 4th module of inputting information about the client, they already had an underwriting decision, right, that they could go back to. It was inside of a minute. Oftentimes it's a lot faster than that. So you're going to get an underwriting decision essentially immediately, which is a really, really nice, I say client friendly. I mean, that's agent advisor friendly. and obviously client, the purchaser of the product friendly, because we know if we can move forward or if we cannot. What's the process look like? So there's going to be complete a field underwriting, and review the pre-qualification health checklist. These are all available on the microsite, but as you might imagine, guys, these are, hey, have you had this in the last 10 years? And it's a parade of horribles from a health perspective. And then there's going to be, have you ever been diagnosed with things like AIDS, HIV, diabetes, whatever that would be a knockout. Those are also available, on the microsite. Once we get through that, it's a 100% Firelight app. I couldn't agree more. I know John said, hey, whether you like it or not, kind of on the Firelight side, that's just where we're going. I know more and more carriers are saying, hey, we're either EAP or we're not, and that's your only choice. I know that creates some heartburn. The reality is, that our apps that come in through Firelight, we get you can still technically NIGO those with some there are a few fields that are left to interpretation, but we have less than 2% NIGO on EAP, and the reality is on paper apps is north of 20%. So for various reasons. So that the fact that this is an EAP only hopefully doesn't give anybody too much heartburn, because the reality is the business is going to go through quicker. We're going to get an instant underwriting decision in step 3, and then once we're there, approved or declined, we don't move forward. Approved, we move forward, complete, sign, and submit the app, and we're off and running. Really, then it was just about getting it funded. And once we're funded, we've got an active live policy. So really slick process, to putting business in place. And again, I think user and customer friendly. I've talked through a lot of this already. Product positioning, I think first and foremost, and the more I say this, I'm not sure, I think it's 50-50 depending on the client, depending on your practice. But, wealth transfer, an accumulation vehicle, right, with a 12%, bonus. I mean, you've got an opportunity to really leverage dollars and get those moved to the next generation from a tax-free position, but also some of the guarantees, right, through the living benefits, which I'm going to show you here shortly, the return of premium feature, and then the simplicity of the process is incredibly attractive. At least the folks I've talked to and pitched this to, they're like, hey, that's as big a deal as anything, because if it's easy to do, right, easy to process, that's attractive to the field. Okay. Funding opportunities, you guys get it, right? Those dusty dollars, money sitting in money market CDs, checking, savings account, money that's sitting out there. Like, hey, we've got this. If we don't need it for anything, right? We're gonna move this along to the grandkids. We're gonna move this along to to their kids. Underperforming life policies are still paying on. That they can utilize those dollars now, for a product like this, or not qualified annuities with a client. They really don't need the money for retirement. They've just left it in that product. These are really nice funding vehicles for the WealthMax bonus life product. Let's look at this as a scenario. So Carol, she's a 65-year-old non-tobacco user. She's got 100,000 in a CD, getting 4%. Okay, pretty typical stuff today, right? She's got a main objective to leave money to her grandchildren when she dies, but she also has some concerns, just in case, right? What happens if I have some health-related expenses later in life, right? Such as medical costs or nursing care or nursing home care. Okay, she doesn't have that crystal ball. She doesn't know what's going to happen, but she'd love to have a what if, or you've seen the thing, hey, break glass in emergency. This is what she's looking to do. It's not the reason she's buying it, right? She wants to leave this money to her grandchildren, but if something happens personally where she needs it, she'd really like to have this as an option. Well, day one, what does this look like? So she gave us $100,000, and I'm going to jump back, right? She's 65 non-tobacco, so that gives her a 1.8 multiplier. That 100,000 turns into $180,000 in guaranteed death benefit, right? Immediately. Here's where it gets cool. The guaranteed health-related, from an accelerated death benefit rider, what does that look like? 95%, right, of the death benefit in the form of a lump sum, $170,750. It's an odd number because I won't go all the way back. There's a $250 expense at claim, so it's really $171,000, but there's the $250 deduction there because of from a fee perspective. Nursing care confinement, almost $5,000 a month for 3 years or a lump sum. Chronic care, same thing, right, up to 60 months, and then almost $135,000 lump sum. That's immediately, gang, right? That's a really good story to tell, because remember, what were Carol's concerns? Leave money to her kids. Did we solve that? Well, she only has 100 right now in a CD, getting 4%. If she died tomorrow, she now has 180. Okay, and what's the other? Right, potential health-related issues. Have we solved, at least to some degree, her concerns there with the center box, right? With whether it's terminal illness, nursing care, or chronic care benefit. Yes, we have. And then, hey, Leon, what happens if I want my money back? Well, here you go. Got to return a premium. Well, here's where it gets really cool. And by the way, this slide and the next are both supplements in the illustration, which are absolutely sales tools. I'd show these to every client. At her life expectancy, okay, of age 89, what does it look like? Now that death benefit's a little north of $326,000. Look at the living benefits, okay? Those are real dollars. And we're not talking return of premium, of course, anymore. We're just talking cash surrender, of just shy of $290,000. So, has this product been a win for Carol? Absolutely it has. Based on her objectives, this has absolutely been a win, especially considering what she was doing with those dollars currently, right? And just kind of rolling them over into CDs. This is eligible for all our programs, right? It's a pretty simple slide, right? Whether it's our tiered comp, our 2025 incentive trip to Turks and Caicos. Guys, if you're close to qualifying for that, keep grinding. That's going to be really competitive. That's our top 40 producers. This qualifies for that. So really nice to have this as a, as we go down the home stretch here. The qualification period ends October 31st. So we'll have, a month and a half to utilize this to qualify. And then it's also available for our internal exchange program as well. I've talked through all this, right? This is really a Swiss Army knife product. I'm a baseball guy. I always talk in terms of a 5-tool player. If you're a baseball person, you get that, right? They can run, hit, throw, hit for power. They can play defense. They can do it all, right? So if you look at this product, tax-free death benefit. It's got the accumulation, and cash value growth, especially with the bonus, the ROP, the benefit rider, longevity benefit. It can do it all. Okay, this is truly a Swiss Army knife for 5-tool player from a product perspective. And then the riders that we've covered already are exciting. Sales opportunities. Again, I've talked about these. I'll probably have to start hiding these slides. I get out in front of myself sometimes, but you guys get this strong accumulation value. The underwriting is simple, single premium, no lapse, death benefit, and all of the indexing options we have are available for this product. So, from a sales opportunity, we really think this is positioned well. The microsite. So with our bridge long-term asset-based long-term care product, when we launched that, we did it with a microsite, meaning it had its own specialized landing page where you can go on there. You can get access to illustrations, application tool, all of the marketing materials, you name it, it's housed in the microsite. This is how I learned the long-term care product bridge. This is really a one-stop shop to get yourself educated on this product, and obviously illustrate and put business in place. And this is right on the agent portal. You'll go on the far right-hand side. There's a tab that says microsites. You'll click it. You'll have the opportunity to go to the bridge or the WealthMax microsite. Very simple. John, that's what we have. I don't know if I can't quite see if there are any questions out there. Is there anything that you wanted me to touch on a little bit more in depth? But that's the product, right? This isn't an overly complex product, but we think especially as the market continues to shift, from a rate environment, the amount of money that is going to be passed down to heirs, in the next 20 years. We just thought the timing was right, that the economic environment was right to relaunch this product. I think we've got the potential to have something here that's a home run. We know competitively it fits really well. So we're proud of it and we're excited for tomorrow.
Yeah, thanks, Leon. So I want to go back to the underwriting portion. I know we said non-intrusive, right? So no phone interviews, no electronic client interview either, correct? Like all the other products on the market?
That's correct.
All right, so this is truly just an instant decision if clients are used to, or
It
agents are
is.
used to a final expense simplified issue. This is going to pretty much
It is. Yeah,
that.
and one caveat to that, if you get a declination and the client, this will happen occasionally where, the client doesn't agree with it. Like, hey, whatever the condition is that, hey, this is managed or that's not accurate. We do have a dedicated underwriter for this product that will review and do a more traditional underwriting of the product. The client or the group or agency has to acquire the APS. We will not do that, but once we have that, we will perform a more traditional evaluation from an underwriting perspective. So that's the only time when you'd have a more traditional underwriting, when you have a declination.
Perfect. No, I think that that's definitely a differentiator
Yeah.
compared to other products on the market. Um, and then can you just briefly touch, I know, on the life side, we don't have any indexes that are like the performance trigger. Can you just go over that really quickly? Once again, because I love that index. I love the concept of that, because it's pretty much, like you said, gain $1 in the S&P, you get the 8% or whatever the
Yeah.
rate would be for that year, correct?
Yeah, man. I love the performance trigger because I can explain it. Sometimes you get some of these more complex indexing or crediting strategies, and boy, you gotta really, really know the nuts and bolts of it. This one's pretty simple, and but powerful. So yeah, again, you just said it. If we have $1 gain in the S&P, right, we will get credited 8% in that strategy. Okay, if if they say we have a negative 8%, right? We get zero. So we don't take the negative eight. We just go flat. That's the old zero is your hero thing, which I'm not sure I have always agreed with. But you don't take. So that's the protection from downside risk. If the market returns 12%, you get 8. Okay. So yeah, there are really the three scenarios, right? We get any gain, we're going to get 8. Okay. Anything over 8, we're going to get 8, and anything negative, we're going to get 0. Okay. We're not going to go backwards. Does that make sense?
Yeah, no, I just wanted to make sure that everybody like kind
Yep.
of nailed home that point, because that's I love that an index option like that. And then looking at all these rates, I'm no annuity um, expert at all, but looking at those, kind of this as somewhat of an annuity alternative, right?
Yep.
With rates dropping, guaranteed rates dropping, cap rates dropping. I mean, these are very, very impressive.
Yeah, no, and that's kind of, I made that point a couple times, right? Is look, I mean, I spend the vast majority of my time talking annuities, but and that's why I was really, really excited to see this product come out, because it really is a supplement to what's going on in the marketplace now. Look, I think the annuity market is still great. There's still a ton of options and great products out there, and we're still selling a ton of them. But I think depending on what the client needs, this can fill a lot of holes. It really can. I mean, we're talking about this in conjunction with Bridge, our long-term care, our asset-based long-term care product. And, depending on the state you're in, boy, this offers an option to have some of that protection on some of those risks that the client has. So yeah, it's I mean, the opportunity here from a crediting strategy perspective, the product itself, just from a positioning, the ease with which you can get the underwriting done. This, I've used the term, we're proud of it. We really are.
And then one last thing I want to point out, I know we didn't, you talked about a sample illustration. If anybody has any, clients who want to see how the product works, reach out to either myself or somebody else here, Beth, Stefan, or
Yep.
Paul on the live team. We'll get you an illustration ran. Another supplemental page on the illustration that I love using is that comparative piece to, say, a MIGA or a CD, right? That you could put in, Leon, that you could put in, say, hey, they're getting 4% in that scenario that you used here in the presentation, and assume they're at a 22% tax bracket, right? How long is that going to take? It'll illustrate how long it's going to take for that product to break even compared to the product, correct?
Yeah, so if you're literally talking to Carol, right, you can show her, hey, here's what your CD is going to look like, and here's it compared to this product, and it's an absolute. It's not a hey, it's a well, this might perform. No, this is how this is the math, right? So yeah, that's it. The illustration and some of the updates and upgrades and supplementals they've added to that, I think, is just incredible.
Yep, nope, I agree.
From a sales perspective, the illustration really being a sales tool.
Yep, 100% agree. 100% agree. So I don't see any other questions in the chat here, so I just wanted to bring those up. Appreciate
Great.
your time here, Leon. Appreciate everybody else's time. Like you said, great partnership that we have with everybody on the team there at EquiTrust. Great products, great support we receive from them. So I know I was super excited when I heard that this product was coming back out. I know they're excited. Everybody there, the EquiTrust team is excited. So reach out to us here, your life sales team at IAMS, 800-255-5055. And we'll be reaching out to everybody here attended. I want to thank everybody for their time today. Thank you, Leon, once again. And we'll talk soon, everybody. Thank you.
Hey, thanks, everybody. Appreciate it.